Good morning and happy Friday. It's the day before a great weekend, I hope, and hopefully you've got some great plans, maybe working on the honey-do list or what have you, but just wanted to give you a quick update on what's going on in the mortgage bond market after 2 days of Ben Bernanke testimony to the Houses of Congress. I'm Jed Wonderly and with Noble Home Loans, and this is the Mortgage Market Minute. So first of all, obviously, the mortgage market had already digested everything that Ben Bernanke was meaning with what he had said previously, since there was hardly any reaction to what he said on Wednesday and Thursday at all. Now, that said, he did stress again how important it is going to be with regard to the data. So going forward, every little bit of economic data we get is going to be key and could be a big market mover one way or the other. So I would definitely look at locking and being very cautious before any big data releases. Of course, the very key data points that he is really looking for is the employment report from the Bureau of Labor Statistics. Now that is coming out 2 weeks from today. It's always the first Friday in August. So be very cautious with any data points, but especially with that one. Again, I would probably look at locking ahead of that. With regard to locking, if you have a loan closing within 7 days, I would definitely lock and take advantage of the gains we've had over the last week or so, with yesterday being the only anomaly in that time period. But other than that, if your loans are closing outside of 7 days, I would float, but I would also be very cautious and judicious about what the market's doing. I'd keep an eye on the market very closely, and if you see the market move at all against you, try to lock ahead of a reprice. It's a little difficult to do, but it can be done, and it's a great feeling to be able to tell your client that, hey, we got it locked for you before the big move. Now, the other thing I would also tell you is that from a technical standpoint, the market does have a little bit of room to go up. It closed below, I should say, the first resistance level of 104 yesterday, but not very far below it. And right now, with the upward move, we're up about 21 basis points this morning. We've made up back all of the 15 basis points we were down yesterday and then some. And so right now we are a little bit over that first resistance level. The bias has changed a little bit so that the relative strength index is right kind of in between overbought and oversold. So we're not bumping our heads on the overbought indicator, which basically allows for some upward movement. Assuming again that we close above the first resistance level. That's my report, and I'm sticking to it. You have a great weekend and make today great. Take care now.